Hey everyone, today's video is a biography, and it's about someone who quietly shapes half the AI headlines you read, and who most of you have probably never heard of. In October 2025, a Japanese billionaire sold his entire stake in the most valuable chip company on the planet, Nvidia. He sold it to help pay for a bet on a company that has never once turned a profit, OpenAI. Today, he holds one of the biggest slices of the AI pie. His name is Masayoshi Son. For more than 40 years, he has made a habit of selling the sure thing to chase the impossible one. Sometimes that habit makes him one of the richest people in Asia. Sometimes it costs him $14 billion on a single company. Today, I want to walk through how a kid who grew up in tough circumstances on a small island in Japan built SoftBank into one of the boldest forces in global technology, and why he is now betting the entire company on artificial intelligence. Son was born in 1957 near Tosu on the island of Kyushu, into a Korean immigrant family. His childhood was never going to be easy. His father raised pigs, worked in fisheries, and ran pachinko parlors, which is basically the Japanese version of a slot machine arcade. None of that was glamorous, but it taught young Son how to read people and take a risk, and that turned out to matter more than any classroom ever could. At 16, he asked for a meeting with Fujita, the man who had built McDonald's into a huge business in Japan. He got 15 minutes. Fujita told him two things: learn English and get into computers, because that was where the future was heading. Son took that seriously enough to leave Japan alone at 16 and move to the United States. He finished high school in California within days by skipping 2 grade levels, then went on to study economics at the University of California, Berkeley. While he was still a student, he and a small team built a pocket-sized device that could translate between languages. He sold the patent to the electronics company Sharp for close to $1 million. That deal gave him his very first real capital. He returned to Japan in 1981 and used it to start a software distribution company that would eventually grow into SoftBank. Honestly, the first time I heard the name SoftBank, I assumed it was a bank. It isn't. Today, it operates as 3 businesses stacked inside one holding company: a Japanese telecom and internet business, ownership of the chip design company ARM, and the Vision Fund, which is one of the largest technology investment vehicles ever assembled. Son himself doesn't build any of these products. What he does is supply enormous amounts of capital and enormous amounts of conviction to people who are building something he believes in. The clearest early example is Alibaba. In the year 2000, Son put around $20 million into a small Chinese startup run by a young English teacher named Jack Ma. That $20 million eventually grew into a stake worth tens of billions of dollars, and it is still talked about as one of the single greatest venture bets ever made. It set the pattern for everything that came after. Find someone with an outrageous vision, hand them a huge amount of money, and wait. Before we get into the specific stories, it's worth pausing on just how enormous and wide-ranging these bets actually are. The Vision Fund alone raised close to $100 billion when it launched in 2017, making it the largest technology-focused investment fund the world had ever seen. A second fund followed in 2019 with around $40 billion more. Between them, SoftBank has poured money into more than 300 companies. Long before any of that, in 2013, SoftBank spent about $21.5 billion to take a 78% stake in the American carrier Sprint, one of the largest cross-border acquisitions any Japanese company had ever made. Sprint eventually merged with T-Mobile in 2020, and by the time SoftBank's remaining shares were counted in 2023, the whole Sprint bet had returned more than 8 times its original investment, which quietly makes it one of the best performing deals in the company's history. even though almost nobody talks about it compared to Alibaba or Arm. Then there's the ride-sharing world, where SoftBank effectively tried to buy a stake in almost every major player at once, pouring more than $20 billion combined into Uber, Didi Chuxing in China, and Grab in Southeast Asia. It also backed ByteDance, the company behind TikTok, and in South Korea, it put around $3 billion into the e-commerce company Coupang, a stake that turned into a paper profit of over $33 billion the day Coupang went public in 2021. And then there's Boston Dynamics. SoftBank bought the robotics company from Google's parent company Alphabet in 2017, drawn in by the same instinct that made it chase Alibaba and Arm, a genuine belief that walking, jumping robots would eventually matter commercially, not just as viral videos. In 2021, it sold an 80% stake to Hyundai for under $1 billion, valuing the entire company at just $1.1 billion at the time. SoftBank kept a small remaining piece, but in the middle of 2026, right as Boston Dynamics started actual commercial production of its humanoid robot Atlas, SoftBank sold off that very last sliver too, for around $325 million, at a valuation of roughly $3.3 billion, about 3 times what the company was worth just 5 years earlier. In other words, SoftBank built the robot everyone recognizes from those videos, carried it for nearly a decade, and then walked away completely right as it was about to become a real commercial product instead of a research project. Let's talk about the bets that paid off, starting with Arm. In 2016, SoftBank bought the British chip designer Arm for $32 billion, a jaw-dropping number at the time. Plenty of analysts questioned why a Japanese telecom firm needed to own a chip designer at all. In 2023, SoftBank took Arm public again through an IPO valued at around $54.5 billion. Fast forward to today, and Arm's designs sit underneath most of the chips powering the entire AI boom. Its market value has crossed $300 billion. SoftBank still owns roughly 90% of it. And the paper profit on that original bet is now estimated at more than $220 billion, a return of over 500%. Arm alone now represents close to a third of SoftBank's entire portfolio value. It might be the single best trade in the company's history. Now, Nvidia is a messier story, and honestly, I think it's the more interesting one. In 2017, SoftBank's Vision Fund spent around $700 million for a 4.9% stake in Nvidia, a position that was worth around $4 billion at the time. In January 2019, it sold that entire position for about $3.3 billion, nearly 5 times its original investment. The problem is what happened next. Nvidia went on to become the most important company of the entire AI era. Had SoftBank simply held on, that stake would be worth more than $150 billion today. Son has talked about this publicly and openly called it a mistake, saying, quote, "The fish that got away was big." At an AI summit in Tokyo, Nvidia's CEO Jensen Huang actually joked with him on stage about it, and the two of them hugged while Huang said, "We can cry together." SoftBank rebuilt a new position in Nvidia in 2020, but then in October 2025, it sold that stake too, this time for $5.83 billion, specifically to help fund its enormous new bet on OpenAI. So Nvidia is somehow both one of SoftBank's more profitable trades and at the same time, probably its single biggest regret. That contradiction tells you a lot about how Son actually operates. He is completely willing to walk away from a position that is working the moment he sees something bigger. Now for the other side of the ledger. Starting in 2017, SoftBank poured somewhere around $16 to $18 billion into the office-sharing startup WeWork, led by its charismatic founder Adam Neumann. By early 2019, SoftBank had the company valued at $47 billion. For comparison, IWG, a much older company running a very similar shared office business, was worth less than $2 billion around that same period. Later that year, when WeWork tried to go public, the IPO paperwork exposed years of unusual corporate governance and a lot of personal deal-making by Neumann. Investor confidence collapsed almost overnight, and the IPO was pulled. SoftBank stepped in with a rescue package just to keep the company alive, taking control at a fraction of that original valuation, somewhere around $8 to $10 billion. Even after a public listing in 2021, WeWork kept burning through cash, and in November 2023 it filed for bankruptcy. The final tally on this one is brutal. SoftBank lost more than $14 billion. Son called it a judgment error in his own words and said he was looking back on it with true regret. What makes it sting even more is that Neumann himself walked away with close to $1 billion across exit packages and settlements, while ordinary employees holding common stock in the company saw their shares reduced to nothing. WeWork is the argument people always reach for first when they want to criticize Son. Part of what makes SoftBank different from a normal investment firm is that it does not only deploy its own money, it makes its biggest investments in partnership with entire countries. Back in 2016, Saudi Arabia's Public Investment Fund committed $45 billion to the Vision Fund, the single largest commitment from any outside partner, tied directly into Saudi Arabia's own plan to diversify its economy away from oil. The United Arab Emirates and its Mubadala Fund added up to $15 billion on top of that. Without these sovereign wealth funds, the Vision Fund simply would not have existed at the scale it reached. More recently, in January 2025, Son stood next to the President of the United States, OpenAI's Sam Altman, and Oracle's Larry Ellison to unveil something called Stargate, a joint plan to spend $500 billion over 4 years building AI data centers across the country, aiming for around 10 gigawatts of computing capacity. Construction is already underway on sites like Abilene in Texas, Lordstown in Ohio, a converted former auto plant, and a new campus in Michigan nicknamed The Barn. The project is projected to create over 100,000 jobs. Son now personally chairs the Stargate venture. In a way, he has gone from a company that once needed sovereign wealth funds to bankroll it, to a company acting almost like its own sovereign investment arm, moving comfortably between Riyadh, Abu Dhabi, and Washington. All of this points toward one belief Son has held for close to 2 decades, that artificial intelligence will eventually exceed human intelligence completely, an idea he refers to as the singularity. Back in 2017, he was already telling conference audiences that what he called metal collar workers, meaning AI-powered machines, would replace both blue-collar and white-collar labour. He has even suggested that by around 2047, a single computer chip could carry the equivalent of an IQ of 10,000, far beyond any human genius by his own comparison. His timeline for this keeps getting shorter. In 2024, he described artificial superintelligence, which he defines as intelligence roughly 10,000 times beyond a human's, as being around a decade away. By the middle of 2026, he had cut that estimate down to about 2 years. Whatever you personally think of that specific number, SoftBank is now placing the largest bets of its entire history on that belief being true. The company has become OpenAI's biggest financial backer, funneling in an investment package that reportedly started at up to $40 billion, split between equity and debt, described as the largest private technology funding round ever assembled, and that total has kept growing since. To help pay for it, remember the Nvidia stake we talked about earlier. It was sold again deliberately, specifically to free up cash for this. Alongside the direct investment, there is Stargate itself, and SoftBank's own energy subsidiary is now physically building data center campuses in Ohio and Texas, designed to run OpenAI's models at a scale that simply did not exist a few years ago. Put it all together, and the picture becomes pretty clear. An aging bet on smartphones and mobile internet has been replaced by an enormous bet that the next decade belongs to whoever controls both the computing power and the intelligence running on top of it. Son wants SoftBank sitting right at the center of that, the same way it once sat at the center of the mobile internet 20 years earlier. So, where does all of this leave the company right now? For the fiscal year that ended in March 2026, SoftBank reported revenue of about 7.8 trillion yen, somewhere around $50 billion, and a record net profit of roughly 5 trillion yen, close to $31 billion, driven heavily by gains tied to its AI bets. Between the two vision funds and its direct holdings, SoftBank's portfolio now stretches across more than 400 companies, everything from ride-sharing and e-commerce to chip design, satellites, and increasingly robotics and AI infrastructure. Its single largest position by far is OpenAI, where its investment is on track to reach around $65 billion. In the spring, an AI-driven rally pushed SoftBank's market value past Toyota, making it for a moment Japan's single most valuable company, and it briefly made Masayoshi Son the richest person in Asia, with a net worth Forbes put at around $97 billion. Then, in late June, reports that OpenAI might push its long-awaited public listing back to 2027, wiped tens of billions of dollars off SoftBank's market value in a single trading session, and knocked a large chunk off Son's personal fortune along with it. As of right now, SoftBank's market capitalization sits somewhere around $200 billion, well below that spring peak. And the company is also carrying a large bridge loan tied directly to its OpenAI position that comes due in 2027, with no public listing yet in sight to help pay it off. Zoom out far enough, and you start to see how consistent this pattern actually is. Put enormous, sometimes reckless amounts of capital behind a technology before most people believe in it. Except that some of those bets are going to collapse completely. Structure the company so that one enormous win, like Alibaba or Arm, can outweigh everything that goes wrong elsewhere. During the dot-com crash in the year 2000, SoftBank's stock fell more than 90%, and Son's own paper fortune, which had briefly been the largest in the entire world, nearly disappeared. He kept going anyway. Whether the AI bet turns into another Alibaba or another WeWork is an open question. Reasonable people in finance disagree right now about whether current AI spending is a long overdue infrastructure build-out or a bubble waiting to pop. But very few investors alive are willing to bet an entire company's future on a single technological belief the way Masayoshi Son keeps doing over and over again. Quick note before I go, none of this is financial or investment advice, just my own read on one of the more unusual careers in modern business. Thanks for watching. What do you think about Masayoshi Son? Let me know in the comments. Take care of yourselves until next time.